Hi there, traders. This is Brad Gilbert with today's trading action. All right, now I've been away for a couple of days, come back, and there's not a lot of change. There's been some sort of disjointed moves, but the overall theme is still the same, right? Still a lot of question marks about who's pushing dollar yen down, whether it's the BOJ or other fund managers. Top Fed officials say they are closer to cutting interest rates, right? That's the sort of key theme of it. Now, we've had some sort of interesting data out this week. A little bit stronger retail sales, saw a little bit of a pop up in the dollar, but overall the dollar is going down. And this is what I was saying the other day about, looking at a long-term perspective, the dollar, and you can get caught up in all the discombobulation because, like the euro data, sterling data, Aussie, Kiwi, CAD, for example, the data is like just not hitting the mark insofar as adding up to either strong or weak. They're discombobulating a little bit. The US dollar, they are telling us that, lower rates are coming, right? So the big picture is probably where the action is. I'm seeing a lot of disjointed price action here, and even the Aussie today, right? So the data, there's some odd things happening. And when there's odd things happening, the liquidity providers start to pull the liquidity out because they're getting hit, right? So just having a look at the Aussie employment numbers here for a start. Now, employment numbers, and I'm going to be covering the UK employment numbers in about 4 hours. The change, really big numbers, right? It's like everyone's searching for jobs, for money to keep going with the rising cost of living. Now, the unemployment rate at the top end of the spectrum, okay? Previous rate, 4%. The maximum was 4.1. So we're seeing unemployment drift higher, but there's more jobs, right? So something's got to give here. I'd say it's the employment numbers. A lot of the, like the Bureau of Stats and wherever they collect their data, there's got to be question marks over where they are getting the real numbers, right? Because if they start to fall, these currencies will start to really melt down, right? Same for the US for that matter as well. So a bit of discombobulation on the price action. So using pending orders around these releases, be careful. Now, just on that retail sales figures, right? The US retail sales figures on Tuesday, stronger numbers, pushes euro down. But as I said, this is a second tier number. It's not going to change the trend, but it could potentially give us a good entry. Now, euro dropped below that support level and it's higher. When you're looking at dollar index as a sort of benchmark, as an indication of where euro is going to go and everything else, comes back up towards resistance and then starts heading south again. That's what I expect going forward. And dollar yen, right? Looking on the hourly charts, it looks quite orderly, but you start to look on the daily charts, and this is where you can really see where things paint a picture. The dollar index going down, dollar yen is going down, and it's on the daily charts here. It's right, hit the bottom of the cloud and bounced back above it. This has to be a target, right? That bottom of the cloud. If you're looking for the a trade there, I'd be using Ichimoku Trader to get short dollar yen on a breakdown through that cloud. Euro, it's hard work going up for euro, right? We've got interest rate cuts on the horizon, bit of geopolitical stuff in Europe. Sterling, well, you know what? Those inflation numbers were a little bit stronger yesterday, and that actually takes away the chance of a bit of a rate cut, right? I think it's blown out to almost 70%. No change now. Now the Aussie, well, it's still going higher, but and Kiwi's not going anywhere. They got rate cuts on the horizon there as well. So as I said, at the moment, there's a lot of discombobulation around a lot of the data. So just be careful or look for a long-term structure and don't think you just rush into that long-term trade straight away because, as I said, I was talking about this the other day and the dollar was sort of down here somewhere. You're looking to get back in either towards an hourly resistance level or you're looking at daily trend lines and looking to get into the trend on those moves. Right now, this like trend channel I drew here on the dollar index, there is an entry there, but it's well gone now. The next major level is down here around 103. So you've got things to weigh up because you've got to be extremely patient, have a plan and stick to it. So to me, looking for stronger numbers is a key part to it, or just get on an instrument that is giving us clear directions. And Sterling, well, it's behaving probably the best at this stage. I wouldn't be surprised to see Aussie catch up with it, and definitely dollar yen, right? These are the ones that I would be looking at. You know what? And it's been a long time since I said this. The yen is on the radar, right? You've got to be on this. And I mean, the news wires aren't exactly telling us exactly what's going on there, but you've got to be thinking of that. Just looking at the interest rate probabilities here, right? And the no change from the RBA, right? 79% hike. That's a little bit lower. So they're just holding rates, but the Bank of England have sort of gone from a cut to a no change, right? And 66.9%. So that's what the power of those inflation numbers, slightly stronger or on the strong side, and you see the move or the potential downside move or change of rates in the UK gone for the moment. And that's what we sort of need to be tracking as we go forward. Now today, right, and why I was sort of talking about the employment numbers, I am covering the UK employment numbers, but you know what? You've got to be careful here. We've got to be looking at weighing up a couple of different things, the unemployment rate, of course, and then the employment change. As I said, with the Aussie, we saw discombobulation on the pricing at the time of the release, and that's because we see a worse or a higher unemployment rate, but stronger employment change. And the market doesn't know what to do there. So you get some buying, some selling. The liquidity providers pull their liquidity, and we're left there sort of scratching our head, wondering what happened, and you've probably got a small loss in your account. So I'll be looking at this. We've got the ECB later on today as well. No change of rates, no change of anything, right? So don't get all excited that the ECB are doing something. The plan is already mapped out for those guys. And you come into that North American session, we've got the weekly jobless claims numbers. Now, without too much else coming out, I mean, you got the Philly Fed Business Index. It may have actually be a bit more focused than it otherwise would be, right? Traditionally, this is like a third tier number, maybe even fourth tier. But we have seen it really impact like a top tier number when there's nothing else going on. And the markets, traders are getting extremely frustrated at the banks. The guys I know are, pulling their hair out. They're like, we just can't get into these trades at good levels, and the markets and liquidities and the markets are sort of discombobulating, I was going to say. So just be careful. That's what's happening in the market, right? UK, well, I'll tell you what, we get stronger numbers here. Just focus on what is real. Be objective with the data. Stronger numbers. It's going to change the interest rate probability here for a cut, right, or a change of rates for the Bank of England higher. No change. It will go up to like 80%. But this is where the real but comes in. If we see much weaker numbers, then the chance for a change, or actually the cut here, which is currently 33%, will go up, and that'll see sterling come off. But weigh up what sterling is doing against, in the bigger picture on the trend, right? At the moment, against the dollar, it is going up, and for good reason. The dollar and the Fed are on a path to cutting rates now. So a lower dollar should see sterling higher. We could be weighing up a little bit more here around sterling and the sterling crosses, but I'll cover that in the webinar for our members once we get there. So all in all, we've had the Canadian inflation numbers, we've had the UK inflation numbers. There's a little bit of discombobulation on price action. If anything, to me, the dollar is the play. You can see, and this is where you get some confidence as well. Dollar Swiss and dollar yen both going down. Whether this is a US dollar safe haven play, right? Unwinding the traditional safe havens of the yen and the Swiss. It looks like it, and it looks very clear. So look at yen, look at Swiss. Unlike the yen, the Swiss doesn't really have levels here, whereas dollar yen, we have the luxury of using the Ichimoku cloud as our entry level. So make sure you definitely have a look at that. As you can see here, it did touch the bottom of the cloud and bounced. It's bounced 100 points almost. That's got to be worth a play at some stage for sure. All right, guys, that's it from me for the moment. I'll cover a bit more around what's happening in the market in today's webinar, and we'll go from there. All right, guys, have a good one. Cheerio.